The figure of 2 to 5% of global GDP is generally laundered through the system. And then there's varying statistics about what we actually detect. I've seen figures from the likes of the UN where it's 1 to 2%, but I think it's probably less than that. But we're not destined to just continue to repeat that. In fact, as you know, this will be no surprise to you. We're often talking about we have more data available to us at this point, and we have better inference techniques. So this is what I'm talking about as an inflection point in the industry. We've got more data to inform more advanced inference techniques.
This is the FinTech One-on-One podcast, the show for fintech enthusiasts looking to better understand the leaders shaping fintech and banking today. My name is Peter Renton, and since 2013, I've been conducting in-depth interviews with fintech founders and banking executives. My guest on the show today is Andrew Davies, the Global Head of Financial Crime Compliance Strategy at ComplyAdvantage, a leading provider of AI-driven financial crime risk management solutions. Andrew has been in fighting financial crime, I should say, for most of his career, starting in the mid-90s building sanctions screening tools for central banks and large financial institutions. Before joining ComplyAdvantage, he spent 16 years almost at Fiserv in their financial crime division. In our conversation, we talk about why the industry has historically caught less than 2% of all money laundered globally and why that might be finally changing. We discuss the Mesh platform, ComplyAdvantage's unified solution for payment screening, transaction monitoring, and fraud detection, and their agentic AI analyst, Cassie, who helps to automate financial crime compliance and orchestration. We also get into the compliance challenges of real-time payments, the growing threat from stablecoins, and why Andrew believes data sharing consortiums represent the next inflection point in fighting financial crime. Now let's get on with the show. Welcome to the podcast, Andrew.
Nice to meet you, Peter.
Good to meet you as well. And I'd like to get these things started by giving listeners a little bit of background. And I know you've been in financial crime compliance, shall we say, for several decades now. So maybe we get started with, I'd love to know what drew you to this discipline, shall we say, because it's not an obvious choice. And maybe tell us a little bit about what it was like in the early days compared to today.
So it's sort of an interesting career journey. I actually tell some of my colleagues that I originally started work as a software developer many decades ago. And I was actually working on some projects around the processing of payments. And of course, associated with payments, there was at the time, this is the mid-90s, there was an associated risk around sanctions screening of payment messages. And I thought it was sort of an interesting problem to solve, not only ensuring that the integrity and the safety and the compliance of particular payments, but also making sure that you didn't stop unnecessarily stop payments. And it's been a common thread in the industry. So I'd actually started working on some projects for central banks, large financial institutions around screening their payments for, in particular at the time, OFAC compliance. So I'd worked on some software to do that. And then that was sort of all she wrote. I've been doing this in this particular industry since then, really.
And you came to ComplyAdvantage from Fiserv, right? So what made you want to move to a company like ComplyAdvantage, focusing on specifically fighting financial crime, rather than just sort of the more broader infrastructure play?
Obviously, at Fiserv, I was sort of working in the financial crime space there. But, Fiserv's a huge company. There's got lots of things they focus on, processing payments, but also, managing payment risk. And I just felt that there was, you could be more impactful working at a vendor that was exclusively focused on dealing with this problem and hopefully being part of the solution to solving the financial crime problem. Then, of course, the interesting thing about Comply is there's this, what I refer to as this trinity of assets that we have. So I've never worked at a company that's had this combined set of assets that can help in the financial crime risk management space. And that is domain expertise, technology, but then also underlying everything that we do is data, and using data to that can be used as a sort of a mechanism or an asset to fight financial crime. So that trinity of assets was what drew me to the company, and then just the opportunity to work with the smart people here.
So I'm curious about, you've been around this for a while, and I've always wondered why we do such a bad job, right? If you look at the statistics that I've seen, I'm sure you know them better than I do, but we catch such a tiny percentage. I've seen 1%, I've seen 2% of all sort of illicit financial activity is caught. Why do we catch so few? And are we destined to remain forever in this sort of low single-digit percentage of catching crime?
Yeah, good question. And I think I sort of didn't really sort of answer the question that you'd asked earlier on about the sort of chronology around the industry. Because when I started, we were literally, obviously there were different fraud models around, or fraud detection capabilities at the time. Then really the only sort of AML monitoring that we were doing was actually linked to terrorist financing, and that was sanction screening. And then we've gone through this sort of evolution from that sort of rudimentary technology, just applying it to really high value payments. Then we went through obviously the introduction of transaction monitoring for identifying money laundering. And then of course we went through this step that is still now broadly used, called FRAML. So fraud and AML in a combined platform. The regulators are interested in other predicate crimes for money laundering, including things like human trafficking, drug trafficking. So we have this broad perspective of applying technology and data to solve all of these problems. But of course, as an industry, to your point, and I often talk about this, though, the figure of 2 to 5% of global GDP is generally laundered through the system. And then there's varying statistics about what we actually detect. I've seen figures from the likes of the UN where it's 1 to 2%, but I think it's probably less than that. I'm often talking about that particular statistic. So in the current global economy, that's, we often talk about $3 trillion. I'd read an article recently about the value of the money laundering economy, and it's around 5.6 trillion, which makes it the third largest economy in the world. So we have the US, China, third typically is Germany, but above Germany, just below China, is the money laundering economy, which is staggering. But to your point, yeah, I mean, I often joke I had hair when I started working in this business, but the percentage of global GDP that's laundered and the percentage of that that's detected is still the same. But we're not destined to just continue to repeat that. In fact, as you know, this will be no surprise to you. We're often talking about we have more data available to us at this point, and we have better inference techniques. So this is what I'm talking about as an inflection point in the industry, where we've got more data. Obviously, we're trying to solve the problem of financial crime, but we've got more data to inform more advanced inference techniques. And given this sort of inflection point we're at in the industry, we can certainly do better. And I often talk about this stat because I say, if you remember back to the days when I was at college, if I got like 0.1 or 0.2% on a test, then I've not done very well. We can do better as an industry. Data, technology, and the inference we're making on that data will enable us to be more effective in financial crime.
I interviewed your founder, Charlie Dillingpole, on my podcast back in 2019. I'll link to that in the show notes because he gave some great background on the founding of the company and that sort of thing. But maybe I'd love to get your perspective on how do you describe what ComplyAdvantage does exactly?
Yeah, so a lot of people in the industry have talked about this notion of fraud and AML. They refer to as FRAML. Our platform, our data, goes beyond FRAML. So what I talk about is we have data, technology, and domain expertise that allows us to manage what I refer to as multiple dimensions of financial crime risk. Could be fraud, could be money laundering, terrorist financing, human trafficking. And that's what we manifest in our mesh platform. That's what I say we do. We basically enable our customers to fight financial crime.
So let's talk about that mesh platform, because I was reading about it. Sounds like it does a lot in that. Maybe you can talk about the different sort of functionality of that platform, and maybe if there's a compliance officer that's maybe at a mid-sized bank or a fintech, what does mesh actually change about their day-to-day work?
One of the things that we do annually is we produce a state of financial crime report. It's a report that we downloadable from our website, and it covers like around 600 C-level execs that are experts in this domain. And one of the things that they're wrestling with is that they've got essentially a sort of heterogeneous set of tools, and they may have multiple tools doing the same thing within their organization. So they may have to look at, have this sort of swivel chair notion of going to different tools. What we're doing with Mesh is bringing together all of these capabilities and data onto a single platform. It's a well-worn phrase, but that enables us to get a holistic view of financial crime risk at the relationship level, and like, let's say, a small, a medium size, or even a large bank at this point. So we basically consolidate everything onto a single platform. Now, just having that view of risk is sort of not enough. You want to know, what does that mean for, how I'm monitoring individual customers, or what exposure do I have as an organization around my customers being exposed to, fraud or money laundering or terrorist financing or human trafficking. So the platform itself, and obviously that's based on our own proprietary data. Again, that's one of the reasons why I joined Comply. And then there's a whole sort of layer of entity resolution that we perform on our own data, trying to make all investigations more efficient and informed with the best quality data. And then the real sort of USP, or unique selling point, for Mesh is that sitting on top of that unique data, all drawn together through this sort of middle layer of entity resolution, there's what we refer to as our risk apps. So things like payment screening, transaction monitoring. And remember, transaction monitoring, some unusual behavior that's identified as anomalous in transaction monitoring could be money laundering, or all of the predicate crimes that the organizations like the Financial Action Task Force are telling us about. Then, of course, in addition to that transaction monitoring, I mentioned payment screening, customer screening, and that's really screening any relationship that an organization has, customer risk scoring, and then also detection for things like, unusual activity that could be indicative of fraud. Everything brought together on that single platform, so that then you can sort of inform investigators in one area with the results of investigations in another area. Or unusual behavior could be, I've certainly seen this at financial institutions like those small organizations where they think they've identified some fraud. And this is actually a true story. They identified some fraud in a particular case. They contact the customer. It's not fraud. Gets passed over to the AML team. Turns out that ultimately it was terrorist financing. But having everything together is almost like a force multiplier, because each of the different risk apps that we have can be used to inform the other risk apps, making everything much richer in the sort of management of financial crime.
So then I want to kind of talk about this platform, Mesh. It's described as an AI native platform, but then there's also this other thing I was reading about, Cassie, your agentic AI teammate. And I mean, obviously, when you're dealing with the massive amounts of data that you guys do, AI is essential in really being able to make sense of this sort of huge amounts of different types of data. So tell me a little bit about Cassie and how sort of she, because she's got a female name, fits into Mesh, and how she sort of is able to do a lot of the automations and a lot of the heavy lifting that was probably and presumably done by humans before.
Yeah, so, great question. So the first thing is, and I like the fact that you mentioned this, because we do a lot with agentic AI and AI in the background. So, one of the things that we do is we'll collect and curate adverse media data. And obviously we're using agents in that regard. And that's because historically, if you talk about adverse media, they certainly value adverse media, but they think they're going to get too much noise if they screen against sort of adverse media around the world. Well, what we've done is we've basically automated the process of collecting the data and then using different types of AI techniques to curate the data, so that what you actually see when Cassie sort of enters the mix here is actually relevant information to make a determination about customer screening in the case of Cassie that you mentioned. So first of all, we're using a lot of agentic and a lot of different types of predictive inference, prior to the creation of an investigation within the Mesh tool. But of course, once you create a case, you've got to do something with it. And that's where Cassie comes in. So basically, depending on the configuration that compliance officer wants, you can have Cassie as an agent reach out and take investigations that would typically have been in the past done by human analysts. But you can take a lot of that sort of legwork, because one of the perennial problems that we're dealing with and the problem that we're solving is the creation of cases that are not worthy of a human analyst's time. Generally refer to those as false positives in this domain. So basically, Cassie will take the cases and then perform an investigation. Now, in the case of Cassie, and this was the first agentic analyst that we put out there, Cassie is basically remediating screening or customer screening cases. So someone's a name has hit against either a sanctions list or adverse media, fitness and probity, or a PEP list, a list of politically exposed persons. That then generates a case. Cassie takes that case and in a fully explainable and audited way, Cassie will make a determination about what to do with that case. And that could be that they mark all of the matches within a case as a false positive, or Cassie makes a referral to a human analyst. So in that sort of life cycle, there's still a human in the loop.
Right. Now let's talk about that, because you've been doing this a while. And, I imagine when you were doing this in the 90s, there was a lot more legwork involved, human, basically going and doing investigations yourself manually. What's your take on where the human fits and where the machine should be doing the work?
What we refer to as sort of L1 or level 1 reviews, which is often just trying to find a needle in a haystack. So you're dealing with a lot of false positives. Cassie will take away a lot of that work, but there is still, even now, there is still a spidey sense that the human analysts have that is probably not replicated in a lot of the sort of agentic AI at this point. And certainly there's still a little bit of people are being cautious about sort of making final determinations on financial crime cases covering transaction monitoring, sanctions screening, payment screening, customer screening. They're a bit nervous about completely automating that process. Who knows what will happen in the future. But right now, the idea is that the agents are getting rid of a lot of the false positives so that the pool of false positives becomes smaller, but the investigations are sufficiently unusual to warrant a human analyst. And that's where they step in with that more advanced and more detailed review. However, it's something that's sort of what's fascinated me in some recent conversations is people in compliance teams at financial institutions and fintechs are mandating that the people they're hiring as maybe an AML analyst, AI savvy, and they understand how to use these types of tools. I mean, one of the other things that we do in Mesh is we almost allow our customers to vibe code with natural language creation of different types of detection scenarios. So, how you're sort of articulating that within the tool. We want to make sure that everyone is sort of fully educated in how to do that, because that allows us to be nimble and hopefully realize some sort of material difference in the improvement of financial crime. But, I think to come back to your question, we're going to get Cassie to deal with a lot of the noise, so that the human analysts can come in and work on those investigations that are worthy of their time so they can apply their spidey sense to stopping financial crime.
So then if you look back, say, 2 or 3 decades in what you were doing, how much of your work was just chasing noise and not actually doing something that could move the needle?
Way back in the mists of time, and even consistently, even up to probably 4 or 5 years ago, something like 90% of the work is just basically dealing with the noise. I mean, I've been to organizations, mid-size financial institutions, let's say in the US, if they're screening for sanctions, and 98% of their investigations are false positives.
So what you're saying, the implication of that is that today these departments can be 10 times or more effective than they were before.
Exactly. And that's, that ties us back to, the technology we have available today with the data, how we have this opportunity right now to make a material difference. One of the things I probably should have mentioned earlier, I was reading some statistics recently that were indicating that 80% of millennials think that money laundering is a white collar crime. And of course, we really need to do better than that 0.1 to 0.2% of money laundering that's detected, because some of the criminal activities that are predicate crimes for money laundering, things like human trafficking. Before COVID, there were 40 million people. I think this is according to the International Labour Organization. There were 40 million people that were subject to human slavery. I mean, this is like 2020. Fast forward to today, it's like estimated to be 50 million. So it's getting worse. But if we can be more effective in stopping the proceeds of these criminal activities being laundered through the system and turned into some sort of legitimate asset through the process of money laundering, then hopefully we can stop some of these particularly heinous crimes.
Right. Yes, indeed. So I want to talk about a specific use case because I think it ties into a lot of what you've been saying. And real-time payments in the UK has been around for a long time, got quite a lot of volume running through it. In the US, there's more volume coming through every year. When you're dealing with real-time payments, you're dealing with milliseconds of decision-making time. How does your transaction monitoring allow that kind of speed? And tell us a little bit about that particular use case.
I've been sort of involved in real-time payments, well, for the longest time. It's something that I'm often talking about. There are more than 100 domestic real-time payment infrastructures in the world today that are in production. Oddly, because it's such a sort of an advanced market. But, I think Canada is just about to introduce, I think this year, the RTR rails, the real-time rails. As you mentioned, we had, here in the UK, we've had faster payments since 2006, 2007. By the way, at which point there was a dramatic increase in fraud on real-time payments, because criminals will take advantage of any sort of transformation or any disruption in the financial system. So they'll see where the gaps are and go to that path of least resistance to conduct their nefarious activity. Interestingly, probably just around 10 years ago, when we were introducing the new payment platform in Australia, they were quite forward thinking in Australia about a fraud overlay service provided in the central infrastructure. That's a particular topic where I think we can be gain impactful in financial crime as an industry. But in terms of what we do, and it is sort of interesting with the UK use case, because there have been incidents in the UK in the last sort of 18 months where people have talked about introducing more friction to slow payments down, because they are moving now at the speed of life, really. So what we do specifically on our mesh platform is really a couple of things. The first thing is we want to make sure that we don't introduce unnecessary customer friction, because that will lead to customer churn. Even on the onboarding side, on financial services, I think the application of a new financial services product online, the cart abandonment rates are something like 65%. So we want to make sure everything is as seamless as possible. And the way we do that, first and foremost, is by having technology on mesh that allows our customers to implement what's referred to, and this is a bit of a mantra in our industry, as a risk-based approach. So what's my tolerance for risk? And obviously, given the regulatory landscape at the moment where we're talking about effectiveness, that feeds into this equation. So you need a tool that's flexible on mesh to allow us to set up the configuration so it maps to your particular risk appetite at your organization. Then, of course, there's a whole technology infrastructure that allows us to be fully scalable. And some of the statistics that, our CTO tells me about here at Comply are just staggering. The volumes that our scalability allows us to achieve to meet the real-time payment obligations that our customers have. And it's quite interesting in the context of SEPA Instant Payments and screening the participants in those payments against the EU journal. We've got that risk-based approach, that configuration. Then we've obviously got the underlying technology that's scalable. But then we as a vendor need to build out capabilities for particular use cases. So in the case of the SEPA Instant Payments, you're sort of mandated not to screen them against the EU journal. Rather, what you have to do is if there's a change to the EU journal, you need to basically screen all of the participants in those payments that you have on record. So it's sort of like almost a batch type job, but having that type of capability for those particular unique use cases in markets allows our customers to meet the obligations they have from the origination of a payment to a beneficiary receiving that payment.
Okay, I want to switch gears a little bit and talk about crypto and stablecoins. The Financial Action Task Force has said that stablecoins represent 84% of illicit crypto transaction volume. We've got in the US, we have rulemaking for the Genius Act is well underway. We've got the infrastructure bill clarity that's sort of making its way through Congress. I'm curious about what your thoughts are on stablecoins as a way to kind of driving illicit activity there, and how, as stablecoins get mainstreamed into the banking system, it looks like it's going to happen certainly in this country fairly soon. Where's the compliance infrastructure gap here, and what can we do to make sure that this illicit activity is reduced?
Yeah, so this is something I've been thinking a lot about recently, and obviously, with the conflict in the Middle East, with particular use cases like, the Iranian government, when they were charging tolls for ships to pass through the Strait of Hormuz, they're asking for payment in crypto, particularly stablecoin. So that being said, and a lesson I learned from the former head of NACHA was real-time payments are a good thing. Right? They facilitate global trade. They allow us to make payments and have really sort of 24/7 access to our financial services. So that's good. However, there is inherent risk. Now, of course, traditional payments have been relatively slow. Obviously we have things like the SWIFT GPI, which is de facto real-time payments across around the world, which is great. But, it's quite expensive, some of the existing infrastructures. Now, the thing with stablecoin, from a payment perspective, as a payment almost channel, it sort of democratizes payments. It makes them much cheaper and much faster. So that's good. As long as they're going through credible exchanges and payment companies, because then you have the opportunity to monitor them. And certainly a lot of the exchanges, and we have many as customers, are basically doing the analysis of those stablecoin transactions. However, and something that has been mooted by the Bank of England here, I think the deputy recently talked about banning unhosted wallets, because then the money becomes data. And how do you ensure or trust that data, that money, as like a piece of data moving around the world? I mean, there's no way of intercepting it. So that sort of banning of unhosted wallets is a good sort of first step. I think in the United States, based on some conversations that I'd had recently, we're not looking to ban unhosted wallets. So how do we manage financial crime risk in that context? So the first thing we do is a lot of the techniques need to be, and certainly we're building this into our predictive models, need to be appropriate and be given the right data from stablecoin transactions or other crypto transactions on the blockchain. I always use that tale of two cities quote. It's the best of times, right? We've got access to this secure infrastructure on the blockchain and stablecoins sitting on top of that technology. So that's great. And of course, we do have the travel rule applied to those transactions. So we've got all the data there. We can't necessarily interrogate all of that data. Now, assuming that we can get access to the data and it's revealed to vendors like us by the exchanges, then we can do the appropriate analysis, and obviously thinking about how those transactions or that value comes off ramp into a sort of fiat currency and is used to buy something. So monitoring at that point, given sufficient information, is sort of how we sort of solve the problem in the of these types of crypto transactions.
Right. Okay, so I want to close with looking forward, and I want to touch on something you said earlier. You said we're kind of at an inflection point right now because we do have all these fantastic tools, but we obviously know that the criminals also have all these AI tools at their disposal as well. So I'm curious to see how you see this playing out and take us down 3 to 5 years into the future. What does the world look like when it comes to catching financial crime we have great tools, but they have great tools as well?
Absolutely true. And I think we often talk about a statistic that we have where there's been, I think in the last 2 years, like an 850% increase in the criminals' use of AI. And there are lots of use cases, from account takeover, deep fakes, authorized push payment fraud. It's basically never ending. However, there are some initiatives and there are some mechanisms already in place where we can make a difference. So one of the things that we do with our own data is we create this sort of knowledge graph. It's got millions of nodes in it and millions of connections between the nodes. And financial crime historically has been seen as, this is unusual behavior for Andrew, for example, at his bank. However, financial crime, and particularly things like terrorist financing, money laundering, it's really a network problem. So it draws together all of these bad actors. And I think the future, so if you think like, a few years down the line, and as I mentioned, there are mechanisms to do this already, but we need to share more data across the industry. This is the future of us being materially impactful, doing a better job of stopping financial crime. We're certainly, in our data, building consortium insights based on multiple organizations contributing to those consortium models. It's a well-established technique that's been around for a long time in the credit card fraud space. If we think about it more broadly and bring in more organizations, and of course, an organization like Comply is perfectly positioned to do that because we're offering everything through a sort of software as a service. But sharing consortium insights across our customers will help us be more effective in financial crime, down the line. And then it's a force multiplier because people are contributing to that model as they're encountering new types of attack vectors. So the whole thing becomes a sort of snowball effect of being more positive. Obviously, on the dark web, criminals will share information, but they won't share it at that scale. And that's where we have the opportunity to be impactful. This is something that myself and my colleague Ian Armstrong raised during the some conversations that we had with the UN on their non-binding guidance on countering terrorist financing for member nations, where we talked about this idea of this whole network effect of enabling us to be more effective in financial crime.
Well, you give me some hope then, Andrew. I think that's a great place to end it. Really appreciate you coming on the show today, and I'll be following along with these developments along with everybody else, and best of luck to you. Thanks again.
Excellent. Thanks, Peter.
Now, the most important takeaway for me in this interview, and something I want to emphasize again, is that up until just a few years ago, roughly 90% of compliance work was chasing false positives, investigations that started and went nowhere. 9 out of 10. And at some mid-sized US banks, the figure for sanction screening was as high as 98%. When I pushed him on the implication, he put it simply: AI tools like Cassie mean these departments could be 10 times more effective than before. This is an example of an efficient use of AI that is not about cutting headcount. It is about giving skilled analysts work that is actually worth their time, the cases that genuinely require human judgment to resolve, while AI handles so much of the grunt work. As I said, it gives me hope that maybe we can finally move the needle on fighting financial crime. Anyway, that's it for today's show. If you enjoy these episodes, please go ahead and subscribe, tell a friend, or leave a review. And thanks so much for listening.